Hi, this is Jack from Alpha Charts with a state of the market video. Today is February 27th, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe to my channel. You can also find me on Twitter at AlphaCharts365. Okay, so let's take a look at the S&P like we always do to start off with. And it was a very, very volatile week. Big down day here, another, down day here. Looking at the weekly, you know, not a pretty week at all, but nothing that we haven't seen in this uptrend in the past, right? There's a 5% down week, there's a 3%, this is 2.45. All right, so back to the daily. All in all, S&P intermediate trend is still higher, so that's a positive. We'll see if this 65-day EMA breaks or not, but as of for now, the trend is higher. And I think 37.65 is the next level to be watching for this. But let's go to the Qs because I do like the Qs better. I tend to trade in growth names, and this chart is a little bit busy, but let's go over exactly what it's trying to show. All right, so this was the double bottom breakout, okay? And then we had the uptrend that ensued. And this, I think, is the important low right here, because this was the lowest point, and then technically everything here was the uptrend. So first off, I put a volume weighted average price from this point, since it was the start of the uptrend. And you can see that it hangs out right here at, we'll call it 300. All right, so right now 300 may be important. 300 is also the level of the breakout. So that makes 300 also very important. And when we take the measured move, right? So we're going to go here to roughly here. That's 8.16%. And if this is an ABC pattern, we can then take the measured move from here, and 8% or so roughly is, we'll call it 298. So this 300 range or level, because they're not perfect, my measurements may not be perfect, or sometimes the measured move isn't a perfect exact number. Again, 300 is about where it would land up. Okay, so now we have a confluence of things going on here. We have, prior resistance. We have the AVWAP from the bottom. We have the measured move. So all those things kind of come into play here. So this is the most important level that needs to hold in the growth names and in the Qs for this uptrend to still be valid on an intermediate to longer term basis. If the pullback does get there, the total pullback will be roughly 11.63%. And, we've had pullbacks like that in the past. This was, 10.37. This one was from the top to the bottom, 14.29. So this wouldn't be out of the question or weird or the top or anything like that. Because a lot of people may have been saying this was the top, and then they're like, oh no, but this is the top, right? And so now everyone's saying this is the top. I don't think it is. I mean, no one knows the future, but I think this 300 level is very important. I think that we're doing this kind of little consolidation, and even though these aren't technically inside days, at least this one kind of got undercut at just a pinch. I think that I would consider this inside days and potentially another move to 300s coming. Maybe 310 holds. I don't know. It's possible. It is a fib level. There is a confluence of potential support here and some volume here. I think it's probably churning through it, and there's a good chance that we have one more leg down. So from where we're at now, leg down is another, call it 5%. So 5% is not nothing. And chances are, if you're in growth names, 5% is going to feel very, very hard. And it's gonna feel like the world is ending. But it's only 5% more till we get to this really, really important level. So again, you have to decide your risk tolerance, time frame, and what your stomach can hold. Um, but that's what all this means, right? So you see that the fib levels, I haven't really talked about those. Um, when you take the fib levels from this double bottom, you can see that it came right to um, the measured move higher, and then the ABC correction, that'd be completely normal. And then we could see what happens after that. All right, so there you go. There's the cues. Now the IWM is acting the best out of all of them, right? So it's barely broken down. Looks good. Some volume on the downside coming in the last couple of days, but the whole market's been under pressure, and you can see it is by far the strongest. Just now breaking the 23-day EMA. Also, I wanted to go back to SPX for 1 second, and I want to show you the equal weight. Look how the equal weight SPX is holding up so much better than the market, and so the weighted version at least. So let's just look at Amazon breaking down from this consolidation, right? That's not what you'd expect for a huge name like that. And Apple, again, underneath its moving averages, back in, we'll call it a range at best. So those two are driving the weighted average down, where the RSP is holding up much, much better. You see one's above, one's below. All right. Same thing for the QQQ, right? QQQ is now, we'll call it at the 65-day, but the equal weight you can see is above the 65-day. So again, equal weight is holding up better than the weighted averages, and IWM being the best of the breed by far. All right, so let's look at some sectors. XLF holding up very, very well. Got hit the last 2 days, but overall, if it just comes back and retests this gigantic breakout, that would be normal price action, and that wouldn't be a big deal. So right now, watching for 31 to hold in this ETF and sector, and that wouldn't be terrible, right? I mean, that's maybe another 3% move or so. So we'll just be watching that. But right now, XLF doing nothing wrong, just got extended. SMH is holding up well too. I mean, it's still right at the 23-day. Not a ton of concern in this one. Uptrend is still very strong. So not a ton of concern on my part from the two big market important ETFs. So those look fine. Let's look at wood. So lumber broke out, and now it's coming back retesting. Really would love to see $83 or so hold. If it doesn't, $80 would be the next level. That would be really, really important to hold. So I'm not going to hang my hat on 80, but 83, I think. I'm sorry, I'm not going to hang my hat on 83, but $80 would be really, really important. If the market continues to decline. Again, lumber usually is more of a leading indicator. So right now, it's really not doing anything different than the market. So I'm not too concerned about it either. It's where you see the divergence that I'd be more worried about this. Next up, let's look at bonds. Switch here, get off volume. All right, so looking at the bond ratio of government bonds versus high yield. Now you can see here, huge spike back in February, right? This is March. Huge spike starting in February, leading to March. And now we've slowly, steadily been trending down. And you see there's been, more spikes up, but they've been lower highs. and you've been seeing lower lows come in. So now we have this right here, which is similar to a move like this, and a move like this, and even a move like this. So this is what I am kind of expecting, right? That would be my expectations. We may continue higher. And that means the market probably is still going through a lot of turbulence and potentially lower prices. But once we get above the 65-day EMA, a lot of times there's one more little shakeout in the rate in the bond ratio, and then it comes right back down. So that is kind of what I'm watching for here. Above the 65-day, 1.5%, 1.4ish. That's a little tiny one, 0.87. So you can see kind of how it kind of has been not really going too far past the 65-day. So with further weakness, I'm looking for a look like this, a look like this, and a look like this to tell me that things are going to be okay. Obviously it's the start of something that could be concerning, and you don't want to see a look like this, right? That'd be terrible. All right, moving on. Let's look at put call ratio. So some fear starting to come into the market, nothing overly exceptional. And as you can see, actually, let's go back for a second. Back here, when was this? September. This was October. So looking at the put call ratio, if you go back, this is October right here. Uh, this is September right here. So wouldn't be surprised if put call ratio gets, back to undecided. People don't know what's going on, whipsawing the market, whipsawing kind of back and forth, big volume days. So that wouldn't be surprising. Again, I only really use this for a signal when it really breaks and everyone gets really, really bearish. To me, this was just kind of a normal shakeout of the market. When it gets really, really, this is for me a buy signal, and that's kind of how I use this. But right now, just some fear creeping into the market. So maybe it got overheated, maybe it needed it. We'll see. Looking at the VIX, it's elevated. But again, if you look back in last January, here was October, here was September. So comparing to those, the VIX is still much, much lower. So I wouldn't be shocked if the VIX goes higher, potentially even into the 30s or even the 40s, right? Heck, back in January, it got to 37. So anything below 37 is a lower high. But yeah, so I think the VIX could still go higher, and there could still be more volatility coming in the market. Next up, let's do a value line geometric index. And it's holding up really well. So you see, breadth is not a problem here, right? So I still looks like to me, people rotating out of large caps and going into, small mid caps. Because right now the market's holding up, as far as breadth goes, just fine. Still above the 23-day EMA. Nothing to really be too concerned about there. And it may just have been what's going on right now in the market. It may just have been too many people on one side of the boat, and now all of a sudden they're going for exits, and it's making the market, look real wonky and everything. But under the surface, it's not wholesale sell everything, like we saw here, right? So this was back in COVID was first, a year ago from now, and this was sell everything that's not nailed down, right? We're not seeing that, so there's no real worry, in my opinion, going on in the market. Let's look at gold. Gold is going down, right? I mean, if there's real fear of something big happening, wouldn't people be going to the quote unquote safe haven of gold? And even on a ratio basis, it's still declining. So, there's just no, to me, that's not saying that people are, again, getting out of S&Ps and going into, your safe haven products. So I'm not seeing it at all as far as that goes. MMFI, which is the 50-day percent of stocks above the 50-day. Again, it was up here for a long time, and so it may just need to shake out. Uh, wouldn't be surprised if it comes down into this 50% range or so. That wouldn't beats anything terrible. It's down here all the time. Um, once it gets down here again, this would confirm more of a buy signal. Once the market gets really to one side of the boat. But at this point, this looks to me it's just like most of this normal price action. It's going to come down here and it's going to chop around and it's going to get back up here eventually. That's my expectation. All right, so let's just take one more, just round this out a little bit. In my opinion, I think that we're in for another week of potential volatile price movement. I think likely this is an ABC pattern. Boom, boom, boom. But I don't think right now, in my opinion, the internals are telling me anything to get overly cautious about. I've trimmed personally. I've trimmed names. I've to that just were performing worse in the market by a lot. But I'm still holding on to a bunch of names too. Uh, this 300 level is the level, in my opinion, that everyone needs to watch out for. Yes, 310 may hold, but looking at what's going on, there's I think a good chance that we revisit 300, and 300 then kind of holds. We'll see. Anyway, good luck this week. Know your time frame and risk tolerance. If you liked this video, please like and subscribe. I appreciate it. And y'all have a great week. Stay safe out there.